Oh yeah, it's time to buy insurance. Yes, it is. All right. You can't buy a house unless you buy insurance. Now, we talked about private mortgage insurance before. That's an entirely different thing, okay? Today, we're going to talk about hazard insurance. Hazard insurance is insurance that you're going to buy that you're used to hearing about, like from Farmers Insurance or Allstate or State Farm or Mutual of Omaha and so on, the normal insurance. This is insurance that is going to protect you in case something bad happens, all right? An insurance policy varies tremendously in price, and you should probably shop around to get the best deal that you can. But hazard insurance is going to be bought about 2 weeks before closing, because you can't go to closing unless you had an insurance policy bought and paid for and in place. Okay? So, what about insurance? Well, insurance comes in all kinds of different sizes and shapes and so on and so forth, and your insurance agent is certainly the guy to talk to about this. But basically, homeowners insurance is what we're talking about. In our language, it's also called hazard insurance. Okay? It protects you in case something happens to you. Insurance comes in two basic types when you go out to buy your insurance, your hazard insurance. It's going to be replacement value and standard. And you need to know that the replacement value insurance is a little more expensive than regular standard insurance, but doesn't carry any depreciation on items that might be destroyed, lost, stolen, or whatever if you have to make a claim. In plain language, let's say you bought a TV for $1,000 and it was 3 years ago. And you go out to dinner with your wife, somebody bashes in your front door, steals your TV, and you come back and the TV is gone. Well, with standard insurance, they're going to say, all right, show us a receipt, keep your receipts. And you show them a receipt for $1,000, and they're going to say, all right, well, you've had that TV for 3 years. We thought that TV would only last 5 years, so we're going to depreciate it 3 years and pay you the 2-year value of the TV that's left. So instead of giving $1,000 for a new TV, what you're going to get is $400. Now, if you ever had an insurance claim on your house, this can really be upsetting, because when you thought you were covered, you may or may not be. So please discuss this with your insurance agent at length so that you understand what you're buying. Replacement insurance, on the other hand, if it's a $1,000 TV, you show them a receipt, you get $1,000 to replace a TV with. All of this, of course, comes after your deductible. Deductibles come in different sizes too. You can have a deductible on your house for $250 or $500 or $1,000. The higher your deductible, the less your insurance costs. But also, the higher the deductible, the more you're going to have to pay up front before any money comes from the insurance company. So bear that in mind when you go out to shop for insurance. But insurance is very necessary, and your lender will not loan money unless you have an insurance policy, and you must keep that insurance in place permanently all the time that you own the house. If you ever cancel that insurance and they find out about it, they will issue what's called collateral insurance. That's not good. You need to understand that collateral insurance is insurance that the lender picks out. They don't shop like you do. So you can bet the farm that collateral insurance is going to be triple or quadruple what your insurance would have cost. So don't let your insurance lapse, okay? And when you go out to shop for insurance, ask all the questions that you think might even be dumb questions. There are no dumb questions. And insurance is a crucial part of owning a house. Get out there and shop. See you later.